Good morning, everyone. This is Travis Witherspoon from Carter Cow Capital. Carter Cow Trading on Facebook, YouTube. It is Trade with Travis. Just give me 1 second. I'm trying to make sure that I can be able to make sure that everyone can be able to get onto the stream. For some reason, my stream is acting up. So just give me 1 quick second, and hopefully we'll be able to have everything running live right now as we speak. I can see that it's working live. The thing is, I'm just trying to make sure that it's fully working. Go back real quick. But I hope everybody's doing very well this morning. We're going to go ahead and get started in 1 quick second. Like I ended up saying before, just want to make sure that everyone can be able to get onto the link and be able to see what's actually happening. And then after that, we'll go ahead and get started. Like I ended up saying before, just want to make we got a few people on live right now. Hopefully everybody's doing very well. Once again, just give me 1 quick second, and we'll go ahead and get started, and end up going from there. Let's see. But while I'm doing this, I might as well go ahead and get into it. Let's go ahead and get to the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risks. It involves risks of being able to make money, also involves risks of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you'll end up making money today. So with that being said, as I try to get everything situated, I feel like okay, there we go. Am I on my business page? And end up going from there we go. All right, so I can see myself on my business page. I can see myself on my other Facebook page. Just want to make sure. Okay, sorry about that noise. I just want to make sure I can see myself on YouTube. Once I can see myself on YouTube, then we'll literally get started from there and move forward. Let's see. Okay, perfect. Okay, so here we go. I go ahead and show myself on. The screen right now, and we'll go ahead and get started. Hopefully, everybody's doing very well. Thank you for the little bit of patience that you end up having with me while I was trying to end up getting through with the technical difficulties. This is Trade with Travis. This is January 5th. I got 7:10 a.m. We're gonna end up going for until about 7:30. If you haven't been with us before, what we end up doing here, this is an interactive Forex trading session and analysis. We end up looking at overall opportunities of being able to get into the market. If there's an opportunity, then we end up trading it. If there's not an opportunity, then I tell you to basically stay away from it. But this is a chance for you to be able to learn, be able to ask questions, be able to see what's actually going on. Typically, remember, we end up seeing most of the movement happen at 2 a.m. in the morning. There will be a point in time where I will do a London session where we end up trading in the morning like that. That's for the early 2 o'clockers and everybody else like that like to be able to trade. But from this point, this kind of moving forward and this kind of getting everything else situated, what we're going to end up doing is working for about 20 minutes at this point and really being able to get started from there and seeing where we're at when it comes down to that. So with that being said, I'm going to hurry up and get into the quick little particulars, and we'll be able to go from there. If you haven't been with us before, if you want to learn how to be able to Forex trade, we have our Forex bootcamp that's getting ready to show up. It's actually going to end up being January 25th to January 29th. It's a 5-day session. Basically, what we end up doing is working 1 hour a day on a lot of different information that will end up getting you set up and started and thriving inside of the Forex market, especially being able to learn the basics and getting to a point to where you end up having a set strategy, a broker that you can be able to work with that is a regulated and non-regulated broker, and being able to have a set mindset on how to be able to trade and being able to go from there. Now, With that being said, let's go ahead and take a look at what's happening, what ended up happening yesterday and what's going to end up happening a little bit later on today for us, the overall economic calendar. And then after that, we'll go ahead and move forward. Once again, if you have any questions, please don't hesitate to be able to ask. As we end up doing every day, this is a session for you to be able to ask questions, be able to put yourself into a better position of being able to learn when it comes down to that. So the headline says the pound United States dollar attempts recovery at 136 after a lockdown blow. Essentially, what ended up happening was that because once again a new strand of the coronavirus ends up happening, we end up seeing that Great Britain and a few other places have started to lock down a little bit more to make sure that they can stop the spread when it comes down to that, aside from being able to have the vaccinations and everything else like that. Earlier today, what we ended up seeing was retail sales when it came down to the overall market. Germany ended up having very good retail sales, which were better than last month. Obviously, we're going to end up seeing what ended up happening in December, obviously in February, so we can be able to see how they end up doing for Christmas and everything else like that. But we end up having our OPEC meeting yesterday. This is the second portion of the OPEC meeting that's going to end up happening. Then after that, we're going to end up having some manufacturing PMI that's going to end up happening. So today is still very much a slow day, and today is still a trader's day. Remember, we talked about yesterday in looking at the overall market, we said that the market was probably going to end up being a little slow. It will probably pick up in some areas, but it will probably start to be a little bit slower when it came down to how the market kind of ended up moving from a Forex perspective. From an equities perspective, we thought it was going to end up exploding, and that's exactly what ended up happening. And we'll talk about that with US 30 and NAS 100 and everything else like that. So let's take a look at it. We'll start off with the US dollar index. Like always, we always look at the big three first, and then after that, we'll kind of get an idea about what ended up happening. So we're going to look at the daily because we did the weekly already last week. Currently, right now, what we ended up seeing yesterday was the dollar ended up making a little bit of move to the upside after starting off pretty low when it came down to that overall move. There's still movement to the downside of 11,550. That it should happen overall when it comes down to the movement. I still expect that will happen overall. But just like with anything else like that, you want to look at low prices. You want to look at high prices to be able to sell. If you would have sold a little bit earlier, this is actually this information. When was this? Yeah, if you would have sold right around that 2 o'clock time, you probably would have ended up having a selling opportunity on the US dollar index just in general, with the market basically retracing from there. But overall, what would I do at this particular point? I really wouldn't do that much of anything because the market is basically in the buy zone. That means that US dollar pairs may end up having another day where we may see a little bit of a recovery. Give me a second so I can make sure my dog is eating. Let's see. Sorry about that. But we should see maybe another day of the U.S. dollar starting to recover a little bit. Maybe this might be the start of a head and shoulders pattern. Maybe not a head and shoulder pattern. We might see a mini crown based off of this overall movement, because we can see this A has possibly ended up being broken to the downside if we're looking at it from a 2-hour perspective. But overall, we still see lower lows, lower highs, and the market is still expected to be able to fall down. I think that we're seeing a little bit of recovery right around 11,650, only because the daily D extension ended up getting hit, not necessarily because the U.S. dollar is getting stronger. I just think that it's a little bit of relief. Let's take a look at oil. Let's see. When we take a look at what ended up happening with oil from a daily perspective, the market ended up having a huge push up yesterday, or a huge push up on Sunday, then a huge fall when it came down to that move. We had this hammer movement when it came down to that, and then subsequently from there, the market has basically ended up pushing back up from there. So what is it giving us? It's giving us a mixed bag, and typically when you have a mixed bag, you really don't have that much direction, which means that we're probably seeing basically what ended up happening was the market basically fell back down to the overall support level right around that 4750 area, and then after that started to push back up. This is not enough for me to be able to jump in the market and feel very comfortable with what's happening with this overall market for this overall movement. So I'm going to stay away from oil and not necessarily look at that. We talked about with gold that we wanted to be able to look at being able to buy. We also talked about how this market basically ended up falling down or breaking out of this overall channel to the downside, but we haven't had a retest yet. And because we have not had a retest yet, it's a little bit scary to be able to get into this market and be able to say, okay, well, do I really want to get into this overall movement at this particular point? I would wait for the market to be able to fall down a little bit more, which means that I'm suggesting that the US dollar is going to get a little bit stronger against gold. And then after that, start to push back up. If you are in this overall pair, based off of this movement from 1876 up to 1948, congratulations. Stay with your overall pair. Stay with that overall movement. If you got into it right around that 1768 movement back in early, I believe that was back in early December. Congratulations. Just stay in a pair. This allowed the market to be able to wave. Remember, we're expecting the market to be able to go up to at least 2,000 for this overall movement. Hopefully, it'll give me an opportunity to be able to get in where I get value for this overall movement to the downside. The market gapped up on Sunday, and I'm trading this based off of EA, so it didn't push up, or it didn't take a buy trade within that overall time, and I didn't force it to. So I'm looking at kind of holding on to this overall position as we speak. If we look at silver, I'm going to be very quick with silver. I got 4 silver trades on this one, but I didn't feel comfortable with the overall position. The reason why I didn't feel comfortable with the overall position was because we're basically at the top of resistance when it comes down to this overall channel. And because we're at the top of resistance when it comes down to this overall channel, there's a chance that the market could fall at this overall position as well. So I'm kind of staying away from this one that's on this overall move, even though I still believe that this market is somewhat bullish, or will remain to be bullish up to at least a $30 mark, the $30 mark. Kind of hoping that if we can be able to get a low price on that one, then we should be good for being able to trade that, but not holding my breath on this one. So if I don't get into silver, then I'm not necessarily worried about it. Would like to be able to get into it, but overall, if there's not opportunity, then we'll stay away from it. So going back to what we ended up talking about yesterday, we ended up getting into the Euro United States dollar and just looking at overall trades. Once again, this is another one where my expert advisors are basically trading it for me for the most part. And I am doing some trading on the side when it comes down to being able to take a look at this. If we look at it from a daily perspective, the market is continuing to be bullish, and we're seeing this overall channel movement to the overall upside. We see that we're basically in the buy zone on the daily, which means that we should see some more upside movement. And this market trying to attack 123 and trying to be able to break out of that overall zone. The only problem with this is that if we look at what's actually happening for this overall movement, there is a chance that we could see some further downside movement at this point as well. We can see that it's already done broken out of this overall channel, and if I kind of extend it out a little bit, then we'll talk about, yeah, that could be the low of the overall move, from which we talked about on Monday for that overall movement. That could necessarily be the low, and we could see that this market could push back up. The question is there a reason why the US dollar is getting stronger? Would it be because of stimulus checks? I know personally I haven't received mine. I don't know about what everybody else has basically ended up receiving, but I don't think $600, and I don't think people spending or people using that money for its overall investment will end up pushing the US dollar up. We see in March that it did not happen that way. We seen in March when that movement, or when that actually ended up happening, that actually ended up being somewhat of a negative when it came down to what ended up happening with the US dollar. Especially we're looking at, let's see, we go back to right around March time, around this overall area, we start to see that the market really started to push up from this overall point, from that 110 area. I mean, from that 110 area all the way up to where we are right now. So I'm still in the mindset of saying that the US dollar is going to end up being weak. I'm still looking at low prices for us being able to get in. If we can be able to get those low prices to be able to get in on this overall push, then we should see upside movement. And this is the area where we talked about where that morning star actually ended up happening, which was right here. And we're slowly starting to see that hopefully this market will start to keep on pushing up, hit that D extension, and then go from there. But I'm bullish on the Euro United States dollar without getting in. If I haven't got in at this particular point, probably not. Remember, we talked about that counter trend line break. You could have got in at the counter trend line break at 122.50. Then that probably would have been a very good number to be able to get into. Right now, if you're not into it, there's still value there. I will say that, and there's about 70 pips of being able to get in if you want to place your stop below the overall swing low of this spot right here. That could be a thought process of being able to do it. Let's say you place your stop below 120, basically at 122.10, and being able to go after 123 to 125 ish, which is the daily D extension. that will be about a 100 to about 400 pip move. If you're looking at being able to get into that, I will look at that, but I'll wait for the 2 hour to get into the buy zone before making that move. Let's take a look at the pound United States dollar. The pound actually ended up taking a dive yesterday, and it was somewhat predictable on the market taking a little bit of a dive. Remember, we talked about over the break that this pair was probably the biggest pair when it came down to movement. Give me a second. Let's see. I got my boys in the background. Hey.
What's going on?
What's going on, big man? Come on, let's go upstairs. Yep. Good morning. Want a banana? A little bit. Okay, sorry about that. But what ended up happening was that the market actually ended up dropping over 100 pips from that movement from the top side. And currently right now, we can see that the market was in the buy zone. We had a counter trend line break to the upside. So if you did get into the market at this particular point and you're trying to go all the way up to the daily D extension, which is expected to be at 138.50. That wasn't necessarily a bad move to be able to get into. The only thing that I don't like is if you're looking at what happened with the daily, we end up getting more of an evening star to be able to happen. You got an evening star right here, and we can start to see what's happening right now is a indecision candlestick at the beginning of the morning. You would like to see, based off of the London movement and the Frankfurt movement of the openings and everything else like that, that this market would have had a stronger reaction based off of that movement. I didn't see that stronger reaction, which means that we probably may end up seeing that this market may end up falling. I actually ended up getting into this pair a little bit earlier on Sunday. I'm down 100 pips on some of my trades. My stop loss is probably not going to end up getting touched, but overall, it's not a good way to be able to get started for its overall movement. But we do see a counter trend line break to the upside. The thing is, how's this market going to end up reacting to the overall upside for this movement? Will it start to get a little bit of push? Will the United States dollar end up getting stronger over the course of these next couple of days? At least early. That would be something to really kind of pay attention to. I'm going to end up looking at that a little bit later on. I'm going to get into the indices because we want to talk about what ended up happening with the overall movement for the indices. And then after that, we end up going from there. Give me 1 second. All right, sound. Okay, so going based off of what I ended up saying a little bit earlier, we talked about this market basically taking a move to the downside. We talked about it was going to end up being predictable that this market would fall. And the reason why I thought it was going to be predictable that this market would fall was because the way that it was kind of aligned and being able to get in. Now, the problem with that was that we was trying to see if we could be able to get in for a low price, and then after that, being able to see if we could be able to take a little bit of a trade from there, and being able to get the most out of it from that overall position. If we look at what happened off the 2 hour, this market ended up having a strong push to the downside. It never ended up hitting the buy zone. Currently, right now, the market has hit at that little lower level where we talked about that we wanted to be able to get in, which was right around that 30,212 mark. Since then, the market seems like it's about to break another counter trend line break and move to the downside again. If that does happen, then before the trades that I'm actually in for is buying, that will actually end up being a bad situation. I don't necessarily like what I'm looking at right here. I end up getting into this market at 30.77, and the market ended up pushing up. Subsequently, then it actually ended up falling down once again. Currently, the market right now is at 30,162, and it's starting to move down a little bit stronger to the downside. I am a little bit more right now. I'm definitely a little bit more iffy on this overall position, and being able to say, do I actually want to be able to get in? Do I actually want to stay in this position? My EAs actually end up triggering on this position, and I'm starting to see that that may end up being a bad thing, looking at where we actually are right now for that movement. And we have a strong movement to the downside. This is going to overall, looking at where it is at this particular point, this is probably going to end up being one of those days where it's going to end up sucking if I stay in on this overall trade, and be able to go from there. So I'm going to pay attention to it. Definitely going to end up paying attention to it, but I don't like what I see ultimately right now at the beginning portion of this overall move. Hopefully it may end up finding some support, but it seems like we have a counter trend line break, and now it seems like this market is going to end up continuing to fall if it does break this counter trend line break. If it does, then it's going to end up stopping me out. If it doesn't, then we'll start to see the push back up. But I ended up getting into two entries. There was one entry at 30,276. There was another entry at 30,164. I see that it's falling down to 145 at this particular point. I'm down $300 off of this movement. And my overall original entry actually ended up getting stopped out at 30,100 when it fell down the first time. So I don't like that necessarily. We'll see what happens. And we end up going from there. But let's go into NAS 100, and that'll be the last pair that we'll take a look at today. NAS 100 did the same type of movement. We had that fall down from the overall 2 hour, which was once again expected. We thought we were going to end up seeing that movement to the downside, at least at first. And then after that, the question was, well, we're going to end up seeing a little bit more of a rally, and a little bit more of a action, not necessarily a rally, or a retracement of that overall spot. We see that point of control is not necessarily holding, and point of control is actually rejecting. Now, if point of control is going to end up rejecting off of this overall position, then it can go from falling from 1266 all the way down to 12,500 before actually recovering. And if that is the case, then the market is going to continue to move down at this particular point before actually recovering to the upside a little bit more. Now, if we're looking at this, what may end up being the reason of this? One, because it is January, maybe there might be less people actually trying to invest at this particular point because of all of the movement, because of all of the money spent in December. Maybe it might be just because the market is just getting a little bit slower at this particular point for its overall movement, and it's not ready to move as of yet. Those very well may be some situations, some reason why it's not moving at this particular point. Or maybe the market may be bearish. And if the market is just bearish at this particular point, then really and truthfully, it'll probably be better to look at being able to trade it to the downside instead of trading it to the upside. But once again, that's some of the things that I'm kind of just brainstorming and taking a look at overall, and kind of get the mindset of what may end up being the reason why we're seeing this downside strong movement at this particular point. We look at Bloomberg and a few other things like that. There may end up being another reason that is kind of out there that may end up being the reason why the market is actually pushing to the downside the way that it is. But that's my time for today. I do apologize for coming on late because of the technical difficulties. And obviously I end up making that back up on the back end when it comes down to the later show a little bit later on today. The one thing that I would pay attention to is kind of seeing what's happening with, I want to see what's going to end up happening more with equities than what's going to end up happening with Forex at this particular point in time. And seeing what's going to end up happening with the metals a little bit more than what Forex is going to end up happening. Now, obviously, we're a Forex-based show, and we like being able to talk about that U.S.-based movement. But that is a couple pairs that I'm kind of iffy on and kind of saying, okay, well, what's going to end up being the catalyst for that overall movement? So really kind of pay attention to that as we go through and take a look at some of these overall pairs. So you like what we end up doing, please make sure that you like the Carter Cow Trading business page. Make sure that you end up going to Trade with Travis and subscribing to Trade with Travis on YouTube. We will find some overall trading opportunities for us being able to get in. We just haven't found some as of yet to my liking when it comes down to manual movement. But if you like what we end up doing for us, EA movement and everything else like that for us being able to trade, please don't hesitate to be able to ask. All you have to do is go to one of the websites. Please send me a direct link or send me a direct message and we'll be able to go from there. Like always, plan your trade your plan. I see everybody.